What's up, everyone? All right, so we're going to jump right into it here. This episode will be my game plan for the week ahead and my watch list for tomorrow morning. Now, I hope you guys are all having a great long weekend, but I know I'm not. I wish the market was open today, but there's nothing we can do about it. So today, President's Day, Monday, market is closed. Now, we're halfway through the month of February, and so far, for me and for a lot of traders who are disciplined, who have been aggressive at trading catalysts like breaking news, we've been doing really well. But I've also seen some traders who have been struggling because they're trading the backside of a move. I'm gonna help you differentiate the front side versus the backside in today's episode. Now, tomorrow morning, live at 7 a.m., I will be streaming, and I would encourage you guys to check out a 2-week trial here at Warrior Trading, not only so you can listen to my broadcast, my market commentary in real time, to see me taking trades, my positions window, when I'm getting in, when I'm getting out, but also so you can enjoy 2 weeks of access to this platform right here. This is the platform that I use for all of my research, essentially. This is what I'm using for scanning, for technical analysis, for news, and this is the chat platform as well. So I'll put a link in the description for the 2-week trial. It's $20 for 2 weeks. It's gonna give you real-time market data and a sense of what it's like being a member of the community at Warrior Trading and using this software, which has been custom designed for traders like ourselves who focus on momentum and trading breaking news catalysts. So let's take a look right now at sort of set the stage for where we're at on the month. Now, February, as I said, for me has been a pretty solid month. I really can't complain. I've been adjusting my daily goal to $20,000 per day. I was able to average $20,000 a day last week. Finished last week with $106,000 in profit. The first week was $181,000 in profit. That puts me at $288,000 on the month of February, halfway in. All right, we've got 2 more weeks left. Let's see if we can finish strong. So let's look at the profile of the type of stocks I've been making the most money on. This is where it really gets helpful for you. Now, yes, the numbers are big, and that's just a factor of trading with larger position sizes. If you trade with 30, 40, 50,000 share position sizes, well, and you had my skill and expertise and intuition and everything else, then you would also have big numbers on your calendar. So most beginner traders are going to start with smaller size, and that's the right move. You don't start with huge size. You start smaller and then scale up. So just for the month of February, we'll look at the last 2 weeks here. So for the month of February, we got $288,000, and average daily gains 28,000, which is good. But let's look a little bit at the metrics. So about 70% accuracy, average winners, only 3 minutes long. Lots of trades. I mean, taking a lot of trades, but 3 minutes for the average winner, about 1 minute for the average loser. So I'm cutting my losers quickly. In other words, the second the trade doesn't feel like it's doing what I expected, I'm selling before it even hits my max loss. Now, I have had a couple bigger losers like this one here, but all things considered, that's not bad. So cutting losses quickly is important. We'll come back to that. Let's look at days and times that have been most profitable for me. So through the week, as it turns out, Thursday right now, best day of the week. Monday's been a little slow and Wednesday's been a little slow. I think it's just, these are only 2 weeks, so it's not a lot to gain from that. Performance by day of time or time of the day. So between, this is half hour or 1 hour increments. So between 6 and 7, 7 and 8, 8 and 9. So 8 and 9 has been my most profitable window for the last couple weeks. And then between 9 and 10. 10 and 11, I've actually lost money. So this all comes back to what is the time of day when these companies are putting out breaking news, right? So traders have asked me this a little bit. They said, Ross, what about, trading at 4 a.m., right? The market technically opens at 4 a.m. Or, you've got this sort of window of 4 a.m. to 9:30 a.m. right here. But what we know is that most retail brokers come online at about 7 a.m., all right? So you've got 7 a.m. here, which is when most brokers come online. And most of the companies they hire, PR firms. They're aware of traders. They're aware of trading activity. And in fact, for a lot of these companies, they time the release of their news headlines sort of carefully. They're trying to they want to make sure active traders see the headline and they want active traders to buy their stock. So they're going to be thoughtful about the time of day and the day of the week that they're putting out headline to maximize the effect of the headline. And on the other hand, when you've got bad news, they're also going to be thinking about when can we put this out to sort of have it not be noticed, right? So you have to recognize that there's a little bit of a game that a lot of companies are playing when it comes to sort of when they release their news headlines for maximum effect. And so because there's not a lot of trading volume prior to 7 a.m., most companies don't release news headlines earlier than that. So starting at 7, 7:30, 8, 8:39, 9:30, and well, those are really kind of our headline windows. Those are the big ones. Now, we do have a lot of international companies. So some of the international companies will put out news overnight, but then at 4 a.m. people will see it, but it's just a difficult time because there's not a lot of trading volume. So what really seems to happen is 7 a.m., this is a big window, 7:30, and it'd actually be interesting, would be 8, 8:30, and 9. Well, I ran out of space. What would be interesting here would be to sort of graph out from 7, 8, gosh darn it, 7:30, whatever, 8:30, 9, what am I doing? 9, and then, so at each of these windows, which one has the most headlines? So I would say, if I was going to guess, it's probably 7:30 is high, 8 is really high, 8:30 is super high, and 9 is lower. And then 9:30 at the open is pretty low. So this is kind of like this dispersion, the way the headlines are dispersed across the morning, where we see a lot of headlines coming out during this kind of window here. And then, as you get further into the day, it's less. And then certainly once you're past 9:30, it's very rare that you get a lot of headlines coming out at like 10 a.m., 10:30, 11. That just doesn't happen. So given that, it just so happens that in the last 2 weeks, we've had better headlines between 8 and 9. And the week before that, if we did just the 2 weeks before that, or from January to January 22nd, the window was a little bit more between 7 and 8. It just happened to be when it just was sort of just the luck of the draw for that window. But if we look back through like 2024, or a much longer stretch of time, that's when you can see, all right, well, pretty consistently, it is between 8 and 9. So, and this is sort of the way the trades are dispersed as well. Not a lot of trades before 7, a lot of trades between 7 and 8, a lot of trades between 8 and 9, a lot of trades between 9 and 10, but not as many, and then less as the day goes on. So that's the window where I'm being the most aggressive. All right, so that makes sense. All right, now let's look at price and volume. So we're going to look back, get zoomed in here just on the last 30 days is fine, and focus on the price where I've been doing the best. So a couple people said, Ross, on Friday, I noticed you didn't touch WLD. What was it, WDL? No, WRD? Yeah, WRD. And I said, yeah, I know, it's a little expensive, and that was my main issue. It was a little expensive, floats a little high, and I just thought, did it make a nice move here from 20 all the way up to $37? Yes, it did. In hindsight, could I have traded it? Yeah, I could have, but what my metrics tell me, and I try to trust these a lot, is that this is where I make the most money, stocks under 20 bucks. It's true that there have been stocks and various times where we have something that makes an incredible move that's a little more expensive, and it goes up $10, $15, $20, $30 a share. And I can trade those well, but I often find that when I trade them badly, it goes really badly. Suddenly I'm down 10 points. Being down 10 points with 3,000 shares is a $30,000 loss, and it can happen so fast. So there was another stock, CSAI, that was on the scanners on Thursday, and this stock, kind of was just grinding higher, 18, 20, 25, 30. Pulls back 38, pulls back, breaks through 38, goes all the way up to 52 here. And then this literally this is a 5-minute chart. Let's look at the 1-minute chart, just to kind of give you context and how quickly you can get on the wrong side. So let's just say, maybe you bought it for 40, break of 40, you got some profit, you sold it, and then you got back in here at 48 for that squeeze up to 52. This candle hit a high of 52, and it hit a low of 44. That's an 8-point candle. That's huge. That's in 1 minute. And it's on very light volume, so there's no liquidity. And the next thing you know, it goes from 52 down to $34 a share. It's like a nearly 20-point drop. And it happens in a matter of minutes. So you get on the wrong side of that type of stock, and it can be really bad. And I think that in general, most retail traders just sort of avoid these. When there's a time, I suppose, when they get kind of, some attention, but generally there's better opportunities. Okay, so all of this is to help us create a profile of what I want to be looking for bright and early on Tuesday morning. So we know time of day, and this is creating a plan. So this is the game plan for the week ahead. Time of day, heavy between 7 and 9:30, and then basically stop at 10 a.m. Now it's possible there could be a day where there's still momentum and I could trade a little longer, but this is mostly going to be the window. And if you really want to get dialed in here, we could say 6:45 a.m. All right, so then price. All right, so focusing on stocks between what price? What did we say? Between 2 and 20. I don't do super well under 2, and I don't do super well over 20. So 2 and 20, there it is. All right, so between 2 and 20. That's the wheelhouse. Okay, so what else do we need to know? Well, if we look at some of the trades from last week, and of course, I'm sure many of you watched the recaps, we continue to be in a cycle where we're seeing a lot of momentum on biotech stocks. So last 7 days, just do the last 7 days here. So AIFF, this was Firefly Neurosciences, DOMH, OSTX, EDSA, ACON, XHLD. So there's a couple outliers there, but we did have a number of biotech stocks. So we're going to keep the focus on sector right now, biotech. And so if tomorrow morning the leading gainer is a bank stock or is a natural gas company or something like that, I'm probably going to approach it with caution and just figure it's probably not going to do that much. Now, I also tend to do better on stocks that have more volume, really light volume stocks. Now, the reason I would buy something that's light volume is because the news has just come out and it's moving, and I think, okay, this could be the one. And sometimes I'm right, but if I'm wrong, then it reverses and then more volume doesn't come into it because I was wrong. So if more volume comes into it, then I was right that this news headline is significant. So I generally do better when they have higher volume by the end of the day. But in the moment, you have to make that decision of, am I just one of the first people to see really good news? And is this going to go? Or is this just going to pop and reverse? And the way I kind of decide is I ask myself, what's the sector? What's the price? What's the float? So I know float is an important component as well. That's the number of shares available to trade. So under 10 million and certainly under 2 million is some of the stocks that have the most exponential moves. Just to kind of break that down for you, if you had, for example, float and volume. So let's just look at a big gainer from Friday. Let's pull our charts back up here. So Friday we had JTAI. So, well, this one's not a great example, actually. The float, they've done a bunch of, this is a company, if you look at the chart, that's done a bunch of reverse splits, and so the float and the data can get kind of screwy. But the actual float's about 2 million shares, and they traded 103 million shares of volume, and they went up 100%. So float, 2 million shares, volume 100 million, we'll just round it to 100 million. And the percentage change up or down was plus 130%. So this is what I would say. This is the supply, this is the demand. So if the supply was half and the demand was the same, I would have expected this could have gone up twice what it went up. If the supply was double and the demand was the same, I would expect it might have gone up half of what it did go up. So what we know is that it's always a question of supply and demand. So on the one hand, the lower the supply, the greater the imbalance can be if it has really good news, because the volume will come in because of that news headline. So for me, when I'm looking at the scanners, the first thing I'm kind of asking myself is, what is the likely potential that this is going to see a big imbalance between supply and demand? And when we had WRD hit the scanner and it's a 50 million share float, I'm thinking, how many shares of volume did this trade on the whole day? 20 million shares, 21 million. And so the problem with this is that it's a 50 million share float, which means there's 50 million shares out there that were up 83% on the day. And some of them are going to sell. They're going to want to sell. Being up 83% in one day is a massive win. That doesn't happen all the time. So the reality was that there was not enough buying volume to support all of that selling. Now, one factor here is that this is a somewhat recent IPO, and somewhat recent IPOs can have lockouts where insiders can't sell. So even as much as they might like to sell, they just can't. Now, I didn't research this company in enough detail to know if that was the case here, but it's often the case. So in any case, we need the imbalance between supply and demand. And that's just, we need to have that. Otherwise, we won't see a big move. So back to here, the float is what is the supply. And then where's the demand come from? The demand is from news. So this is where, FDA announcements, approvals, clinical trial results. These are the type of headlines that get these stocks going, typically. So boom, you get this big catalyst here. And then you get the rate of change, where immediately, because you've got a news headline that comes out and you've got a relatively low float, a low level of supply, the stock spikes up. Now, what I notice is that typically the second the news headline comes out, and I mean the second the news headline comes out, these stocks will start spiking. And so what's happening is that there are traders out there that have created high-frequency trading algorithms that are able to analyze the news headline and create a buy or sell order almost instantaneously. And that creates what I call an algo spike. So initially, when the news headline comes out, you'll have, boom, a spike. And now as soon as you have something spiking, there are other algorithms that jump on it simply because the stock is now spiking. Now, there was the first algorithm that had to read the news, see the stock had news, and create the order. And that was probably the most complex because it had to interpret the news. And then in like real time, instantly. And then the other algorithms are just jumping on momentum. They're basically just jumping on what's moving. And I essentially do the same thing, except I use my own discretion to decide whether or not I trust the stock. Now, we could get into a long conversation about, could I automate my strategy? And the long and short of it is, I think the answer is no. But, obviously people have tried, and there are algorithms out there that attempt to do this, but the ones that are successful are run by billion-dollar hedge funds that have incredible amounts of money to hire some of the most sophisticated, computer programming engineer minds from MIT and everything else to create these things. And they're not static. They're constantly having to learn and change and evolve. So anyways, so when these stocks first come up, usually we see, because of the news headline, it's, let's say time 7:30, and immediately, the news hits the wire. You get news that comes out, and there's just an instant green candle like this. So a big green candle that starts, and then that's from the first round of algos that are jumping on it. And then you've got other algorithms that are jumping on as well. And remember that the market makers that are making the market for this stock, how do market makers work? A market maker sits on the bid and the offer, and they're basically capitalizing on arbitrage. They will buy from you when you want to sell, and they'll sell to someone else who wants to buy, and they get to sit in the middle and profit just from the spread. So when you got a stock that has a big spread, they're profiting all day long. Now, a market maker wants to be flat at the end of the day. They want to buy and sell the same number of shares. So they employ their own algorithms to make sure they don't oversell a stock that's really strong, because they become short, right? If you just sell and sell and sell an infinite number of shares to people who are buying, you effectively are short the stock. You're not balanced. So the market maker, as they see these orders coming in, they have to pull their own sell orders back. So now as they pull their sell orders back, that means there's fewer sell orders on the book. And that means when buyers are buying it, they're buying at higher prices. And now that's fueling this squeeze. And so the beginning of this move is what I'd call the algo squeeze. Now, you can profit on an algo squeeze if you're quick, but you have to be pretty quick here. So what other traders will do is wait for the squeeze. And during the time that it's squeezing right here, how do we even know this is all happening? So this is what our scanners are doing. They're searching the market in real time, and they're going to be giving us those audio alerts. Ding, 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 ding. So we pull up the stock and we see, oh, here we go. WRD, whatever it is squeezing right here. So that's that first squeeze basically right there. Then it pulls back for a moment, which is typical. So you get a moment of pullback, which is an opportunity where some short sellers come in trying to predict that maybe the algo is wrong. And what sometimes happens is the algo is wrong, and the stock will do a full reversal all the way back down. So, you sort of realize, wait, that news was not it, because sometimes companies sort of juice the headlines a little bit. They kind of make comments in the headlines that are sort of, I don't know, it's like keyword stuffing. They use very specific keywords to make the headline sound amazing, but it's like sort of like a nothing headline. There's just nothing there. Anyways, but in other cases, it is valid. So early short selling, early profit taking, and then the next round of buyers come in. And this is often where I come in right here. So now sometimes I get both. Sometimes I'll trade it in this area on maybe a pullback or something around like a $0.50, like $5.50. And then it goes up to $6, whatever, and I get 50 cents a share. But this is usually the safest entry. And this is what I call a micro pullback. So this is, someone asked me the other day in the comments, Ross, if you could only trade one setup, what would it be? And I said, micro pullback on a fast moving stock that has breaking news. That would be it right there. That's the one. Now, there's dozens and dozens of setups that I trade. And the more setups you have, the more you'll be able to capitalize and make profit from a stock that's moving because you don't have just, one setup. It's, being a one-trick pony is okay, I guess. This is a consistent setup and I see it pretty much every day. But eventually you'll want to branch out. But this is a good starting point. So then I'm buying on that pullback right there and then riding the momentum on the next leg up and then, taking profit as we go higher and then certainly selling the rest as we get that next pullback. And then you have another group of traders who are coming in here. So often we see that the first pullback and the second pullback both give valid opportunities to trade. And then beyond that, it starts to get a little too extended. And here, perfect example. This just happens to be a perfect example. First pullback, second pullback, third pullback kind of fails. So we see this right here all the time. Now, it just so happened that this was on a slightly higher price stock. It ended up working, all right, that's cool. I didn't trade it, whatever, doesn't matter. But, they'll go with or without you. So, there were obviously enough traders that saw this pattern, saw the stock moving, and felt like it was worth, taking a trade on that we did get a move. So, so that was good to see. But in any case, so the whole point here is if we go back to our plan, we're going to see time of day, price, sector, supply, demand. It's squeezing up. So therefore on scanners and then entry is micro pullback. Just like that. Boom. We're going to buy on the micro pullback. That's what we're looking for. And here's the cool thing. You guys don't have to do this by yourself. All right. I am trading every single day. I've been doing this for more than a decade full time. In fact, I funded my first account in 2001. And with the 2-week trial, you guys can watch over my shoulder and listen to my commentary, be in the community, and actually get a sense of how other traders out there are trading these stocks. Learning how to trade is not unlike learning a new language. This technical analysis is the language of the financial market. And so the way you learn a language is you immerse yourself in a community of people who are speaking that language every single day. So I want to encourage you guys to do that 2-week trial. And my plan for tomorrow, when it comes to very specific stocks, is that from Friday, if we pull up our, our after hours top gainer scanner, you can see some of the stocks that made bigger moves in after hours on Friday. But after hours on Friday on a long weekend, is it likely that CCTG is going to carry into Monday morning? It's got 2.3 million share float. It is a Chinese company, so that's a wild card because these can be kind of crazy. It's a stock that has been beaten up for a while. Now, I do check the daily charts before I take trades. So I look at the position of the 200 moving average. The 200 in this case is at $2.30, so it's kind of right there. I look at recent moves. This sort of history of higher volume red candles doesn't really instill a lot of confidence. And then the current price is right up at about 280. So this could give continuation into Monday, but I just don't know that it's reasonable to expect a whole lot from it. When we try to see, well, what was the catalyst that gave this that move on Friday after the close? 4:30 statement of acquisition of beneficial ownership. When did the move start? Was it right at 4:30? Yeah, so right at 4:30 is when that move began. Oh, hang on, let me open my door for a second. Come on in, girl. All right, so I don't. This usually isn't to me a super strong headline. Let's see. Yeah, see, I just have a little bit of a hard time feeling like this is a headline really worth buying into. So, it says someone else acquired stocks. So it's like, okay. So I'm not sure about that. So that's CCTG, HCTI. This one's, for me, a little too cheap. Now, I know MBRX, someone mentioned this, huge move on this a couple days ago. Obviously started in the lower price range. And, you're right, no doubt, from 50 cents all the way to $3. That's pretty impressive. It doesn't happen every day. Number of halts, right? So now you're stuck in halts. I find that difficult to trade. That price action's not easy. You're just sitting there stuck holding during halts, and you're sort of not a lot of control in that situation. So I'm not a really big fan of those cheaper stocks in general. I'm going to leave that alone. And then if we pull up the continuation scanner, over the last couple of weeks, we have had a number of stocks that have been Chinese stocks that have given us some big moves. But all of them have kind of faded back down. DWTX, this is a stock that went from $2 to $30, but it's come all the way back down. Are we going to get a day where it bounces? And I mean, maybe, but I don't know. MGOL, a little cheaper. LTRY, these are just stocks that have had big ranges. So they're worth just kind of keeping an eye on just to see, is there anything here I should be, keeping maybe as a side chart? DOMH, there's potential on it. GRRR, that's this stock, but the warrants, higher price at this point. INLF, this one made a big move on Friday, Chinese stock, right? So squeezes up, halts down 3 times, liquidation. So it goes from 14 to 5, then rips back up. It's just, this is very difficult to trade, and it's not on a lot of volume either. But you can see it was a blue sky setup. So we do like blue sky setups, but blue sky being recent IPO, squeezing higher. But I just find that it's a combination of this time of day and occurring without a catalyst and beginning with the dump before it rips that just puts me off. I don't trust that. So at this point, I really don't think we have anything super strong from Friday, right, that we should be watching Tuesday morning after the long weekend. I think the name of the game is to follow this plan right here. And this is exactly what I'm going to be doing tomorrow at 7 a.m. So I'm looking forward to seeing you guys in the chat room. I'll be streaming bright and early at 7. And hopefully we'll see some nice stocks on a scanner. And I can, break the ice, build a little bit of profit cushion. And then from there, start to make my way up towards daily goal. All right, so with that, I will see you guys back at it, live streaming tomorrow morning. And I want to remind you, as always, trading is risky. My results aren't typical, so please manage your risk, take it slow, and always practice in a simulator before putting real money on the line.